Reuters correspondent Kathy Yang joins us from Hong Kong. So Kathy, tell us how investors reacted to the China GDP numbers today.
They were relieved. China's GDP results turned out in line and did not turn out to be any worse than feared. So this initial relief helped investor risk appetite in Asia. The regional index outside Japan jumped as much as 1%. Still, the index logged in its steepest weekly loss in 2 months as the index earlier in the week slumped to its lowest for July. Chinese banks, the big winners in both Shanghai and Hong Kong. But the respite was short-lived, especially in Shanghai, after investors there came around to the realities of what a slower-growing China would mean to corporate profits.
Europe also, we did see, was reacting to those China numbers, and we've got our colleague from Reuters in London, Kimberly Lim, joining us on the show. Kim, now the Chinese GDP data has given a much-needed boost to European equities, but the euro continues to trade at two-year lows. Tell us what investors are sensing in the markets.
Well, that's quite right. Now, the thing is that data, while no better or worse than feared, is crucially weak enough to really fuel investor hopes for more official stimulus for the economy, and that's what's really supporting the market. Now, all week, investors have trod a fairly cautious path, worried about those China figures potentially coming in worse than expected. Looking around the market today, basic resources are the ones really leading the bounce back after those numbers. Now, on the flip side, banks, they're bucking the broader bullish trend, with Italian outfits like UniCredit and Intesa Sanpaolo leading the decline there. That, of course, after Moody's surprised markets by downgrading Italy's government bond rating by 2 notches and warned of further cuts possibly to come. And that really leads into the single currency there. It's down near a 2-year low against the dollar after that downgrade, and that's despite Italy's strong performance with 3-year debt auction earlier today.
Also, Kim, tell us how crude prices are trading today.
Well, pretty much as we're seeing across the board, the Chinese GDP data is lifting sentiment even broadly for commodities. Looking at Brent, it's up over $100 a barrel. We saw it up over $102 a barrel just a bit earlier, and it's set to post a third straight week of gains by the end of today. Also weighing there, the US attempts to crack down on Iranian crude exports, production upsets in the North Sea, and potential record low export volume in August are also supporting Brent.
Kimberly Lim, thanks very much for coming in with that check on how Europe's traded today. Let's go to Wall Street, and today's session is expected to be a busy one for the market there. Let's take a look at how the Dow Jones Industrial Average is shaping up. On the economic front, producer prices unexpectedly rose 0.1% in the month of June, despite big drops in energy prices, and that's being viewed as a big positive by the markets today. And there you have it. That's the Dow Jones Industrial Average on your screen, which is up about 0.7% as we speak.